All right. Happy Friday, all you magnificent melon heads. It's Friday afternoon, 3:15 p.m. Eastern Time. It's my favorite time of the week, my Friday afternoon live stream, where, unbound by the constraints of time, get to talk to all you wonderful people about all things going on in the world of finance and economics. And you guys hear that? Hear that sound? It's the gentle sound of a soft landing. It's the subtle caress of the ground as your face smacks into it at hundreds of miles per hour, and your brain just so gently smashes into the inside of your skull because you just died from a sudden impact after falling from the top of a building or a plane. That's the soft landing that the financial press is talking all about this morning after getting the jobs number today. Said, oh, great, what was it, 187,000 jobs was the number? I don't even remember what the number is now. Oh, good, job openings are down, unemployment is up, soft landing. Oh, good, PMIs way down, manufacturing contracting again. Well, it's only like 16 months in a row manufacturing's been contracting in the United States, soft landing. Oh, international trade is slowing. China can't fill a boat and send it across the pond when 2 years ago we couldn't get the stuff through the ports fast enough, soft landing. Banks failing? Remember, that was just a few months ago. Second, third, and fourth largest bank failures in U.S. history. Soft landing. If this landing gets any softer, my brain is going to explode. There's no such thing as a soft landing, folks. There's never been one. It's an illusion. And they keep saying this in the financial press. They keep talking about it on CNBC because you are the exit liquidity. Because they want you to keep FOMOing in. They want you to keep piling into this market. It's giving them time to sell, to park all this stuff that isn't worth as much anymore on your books before they finally pull back the curtain and we realize what it is we're buying, and by then it'll be too late. And I know all you guys are like, oh, another bear who's sore because he got roasted. All those guys, in a few months, we won't see them anymore. Nope, they'll be in the breadline. And this is not me and my conspiracy theories, guys. This is not my tinfoil hat. Merchandising. Spaceballs the flamethrower. They've done this before. I talked a lot about it in my Coreweave video about how Magnetar and the Magnetar trade and about how the banks were in on it. Magnetar and Wing F. Chow, that guy from the memorable scene in The Big Short, it was their job to get all of that toxic sludge off of the balance sheets of the banks and onto the balance sheets of your mutual funds, of your pension funds, of your 401k, your IRA. They all got rich doing it, and none of them went to jail. The banks paid a couple of fines that were a fraction of the proceeds from that activity, i.e. just the cost of doing business for the banks, and you took the hit. And that is what they're doing again. That is your soft landing. They need to convince you to buy to give them time to get out. We got all kinds of economic data today, and it all supports this theory. And they're sitting there telling you like, oh, this economic data is bad, and that just proves that the Fed is doing it exactly right. But they're not doing it exactly right. Nobody's talking about the lag. Nobody's talking about the fact that it takes anywhere from a year to 18 months for the effects of an interest rate hike from the Federal Reserve to show up on Main Street. Which means the effects we're feeling now, this gentle, subtle caress of the ground, is just the effects of the first few rate hikes that they implemented early last year. There's a whole other year of rate hikes that we have not felt yet. It's like that moment that you stub your toe and bare feet on the leg of the table, and you haven't felt the pain yet, but you're bracing because you just know it's coming. Oh my God, there it is. Oh, why did I do that? That's what we're all in for. I apologize for the visual. I still have PTSD from the last time I stubbed my little baby toe on the table. And with that, we're going to shrink my big melon of a head. While we're shrinking my big melon of a head, don't forget, guys, please hit that like button. And if you're new to the channel, won't you please subscribe? We do this live stream every week on Friday at 3:15. We also do a daily live stream every morning with the Morning Update Live, as well as your regular videos, and we'd love to see you on the next one. And while we're here, let's all say hello to my man, The master of the mystic arts, Mish the Mod. How we doing today, brother?
Pretty good. You know the little nursery rhyme where the piggy goes to market?
This little piggy goes to market, yes.
He's not going grocery shopping. He's literally going to the market.
Yeah, and fun fact, we used to have 6 little piggies, but that last little piggy, he was used as exit liquidity, and he died in a market sell-off. A moment of silence for the 6th little piggy. He's no longer with us. And he built his house out of oriented strand board. Big bad wolf of Wall Street just blew it right over. CNN's Fear Greed Index. Uh-oh, are we pushing back into greed territory? You better believe this market is fueled by greed, guys. You better freaking believe it. Again, if you don't think so, go watch that Coreweave video. I'm telling you guys, without greed, this market would be dead at zero right now. Currently at 55. We did dip into fear territory ever so slightly about a week or two ago, but this lackluster jobs data this week, we got a lot of lackluster jobs data. The JOLTS report saw job openings coming down quickly. And we got the ADP numbers, saw fewer job openings than expected, or fewer jobs added than expected. The non-farm payrolls, fewer jobs added than expected. And remember, we're in this bizarro world where bad news is good news, because bad news means maybe the Fed won't keep raising interest rates. It's the wrong mentality. It's entirely wrong, but it is the mentality that's driving sentiment right now that, hey, Jerome is about to pivot, even though he's told us how many times he's not going to pivot yet. He's not done hurting us. Guys, he's told us that. We refuse to believe it. Okay. But this market is running on greed. Let's see what the indexes are doing today, though. Look, pretty much flat. Talk about a muted stock market today. Just range bound. The S&P up a paltry 3.8 points, but still in the green. Number go up. The FOMO bros are like, market's up today, bro. Okay, congratulations. The Dow looking pretty good. What's up, Mish?
Surf's up, bro.
Surf's up, bro. Yeah. Dow's up almost 100 points, 0.25%, doing a little bit better than the S&P today. 34,816 on the Dow. Just keeps heading higher. NASDAQ, however, a little bit risk off in the NASDAQ. Currently down 24 points or 0.17%, but still above 14,000 at 14,011 for the tech-heavy NASDAQ index. The U.S. dollar, though, ooh, what happened today at around 9:45 a.m. Eastern time? That's interesting. We saw the Dixie start to spike about 61 basis points at the moment. That might have been the PMIs. I'm not sure what that data was. What came out around 9:45? We'll have to go back at the economic calendar and see what was released at that point. I'm a little surprised to see the DXY so much higher today, especially considering the S&P is still in positive territory. With the dollar strengthening like that, I'm surprised to see stocks are up.
Jack,
looking over at the bond.
Nothing in the information is driving that. All that ISM stuff came out at 9.
The ISMs came out at 9. So, yeah, that's interesting. Guys, let us know in the comments. What is it you think happened at 9:45 a.m.? I think that's Eastern time is showing on this chart. 9:45 a.m. today. What happened that sent the U.S.?
S&P Global came out at your time, 9:45.
Okay. And remember, S&P Global, that's the name of the company. So it was the S&P Global US PMI. So it's a US statistic. The nomenclature there, it sounds like it's this World Purchasing Managers Index, but S&P Global is the name of the company that puts it out. So it's a US index. That was at 10?
That was at 9:45 your time.
9:40. Okay, good. We'll get to that one. Looking at bonds right now, we got yields are a little bit higher on the long end of the curve, yields a little bit lower on the short end of the curve. So we've got a little bit less of an inversion in the yield curve going on right now. The 30-year Treasury is at 4.28. That's up almost 10 basis points today. The 10-year is at 4.177. That's up almost 9 basis points. Pretty substantial move in the 10-year today, but still down on the week. This thing was at 4.3 just a couple of days ago. So yields have been a lot lower. I've been a little surprised to see those yields going lower, to be honest with you, because I don't know who is suddenly buying 10-year treasuries. It sure as heck isn't me. I don't mind parking my money in the 1 month and yielding 5.38%. Why would I park in the 10-month? This is people are betting on lower rates in the near term, I guess, hoping to capture the higher bond prices on the sale there. The 10-year treasury, though, yielding 4.87. That's up 1 basis point. So not so much there. That's kind of the inflection point. And then all of the short-dated stuff is actually down a little bit. Looking over in commodities this morning, we got December gold futures trading at 1,967. It was a pretty decent week for gold. It's up $1 today. December silver futures trading at 24.56. That's down a quarter today, or about 1%. A little bit lower on my favorite of the shiny. WTI crude October futures trading at 85.84. Oil had a ripping week this week, up $2.21 today, back into the mid 80s. Are we going to see $90 oil soon? And Mish, we were talking earlier, was it this morning? I don't think the story made the cut, but the possibilities of another Russian export cut.
Yeah, they're saying they want to cut 300,000 barrels in September.
And that's possibly, is this an additional 300,000 barrels? Because I think they were already on pace to cut by 500,000 from previously announced cuts. Is this an additional cut that they're talking about?
From what I understand, it is an additional cut.
Interesting. I've also seen some chatter that said the Russians were the primary beneficiaries of the production cuts so far this year, so it makes sense that they're looking for another production cut, because pretty much the Saudis cut first, which meant the Russians were able to capture a little bit of the higher prices from the Saudi price cut before they cut their own production, so the Russians made out pretty well on the limited supply of oil. That's about all we got in the commodity space. Now let's talk about a couple of these stories that came out today, and I tell you guys, sometimes I really just can't help but shake my head at the way all of this data has been portrayed in the mainstream financial press, because we're going on like a year and a half of this data really bad. And I get it, stocks are higher than they were in October or November. I mean, I get it. Stocks and economy, not the same thing. But the way the mainstream press is selling this like everything is so good is just so devoid from the reality. And I'm sure most of you guys are feeling that too, even though I think we have generally a pretty well-to-do audience on this channel here. But I bet you even a lot of you guys are feeling that also, that the messaging coming out of the financial press about how good things are and how great a job our central bankers and our leaders are doing is just the polar opposite of the reality of the stories we see in our daily lives every day. And let me know if that rings a little true in this story that I saw in Bloomberg today. U.S. jobs report signals smooth downshift in labor market. And that I just picture, like, teaching a 16-year-old girl how to drive on a stick shift. And, she's sitting there and you're lurching in and out of your seat. Nice, smooth shift, honey. That a girl. Good job. Good job. Puts a big dent in the side of your car, scratches up your paint, smoke coming out of the exhaust. Good job, honey. Nice, smooth downshift. Thank you. Good job. That very good. Very good. Please put it in park. Put it in park. Please put it in park. Parking brake. Parking brake. That's how I feel right now watching the Fed and what they're doing. Still solid hiring. Slower wage growth gives Fed room to pause. Gives Fed room to pause. And again, no mention of the lag here. No mention of, oh man, if it's already slowing and we're still only feeling the effects of the first few rate hikes, what's going to happen 6 months from now? What's going to still be happening 8 months from now? More people return to the labor force but couldn't find jobs. Is that what they mean by a smooth downshift? That people return to the labor force but couldn't find jobs? Did they ask themselves, why did those people return to the labor force? I wonder how many of those people returning to the labor force are elderly folks who have been unretired thanks to the rising cost of living. And now, thanks to the rising interest rates, these people who are being unretired, having their golden years stolen from them, now they can't find a job because of J-Powell's rate hikes. Isn't that nice? You got to go look for a job because they inflated away your savings and your nest egg, and now you can't stay retired. You got to go look for a job. You can't even get a job as a greeter at Walmart because the rate hikes killed the economy. That's what people are living with. The latest U.S. jobs data showed a labor market undergoing a controlled cooling, illustrated by solid hiring, slower earnings growth, and more people returning to the workforce. Employers added 187,000 jobs in a broad-based advance following downward revisions to payrolls in the prior 2 months, something we've seen every month this year. Every single month, they downwardly revise the prior numbers to no fanfare. Hundreds of thousands more joined the labor force, though a growing number was unable to find work right away. That's terrible news, guys. I, too, am happy to see the labor force participation rate going up, but I don't want to see grandmas unretiring because they can't afford to live. We want to see younger folks being welcomed into the job market during their peak earning years, during their peak productive years. That's what we want to see. We don't want to see grandma being forced back into the job market because her savings were inflated away. Now, there was something else here. There was one quote that I really got me going here. Where is it? Give me a second here. Oh, this one right here. This is from ZipRecruiter's chief economist, Julia Pollack. And ZipRecruiter, that's one of those companies that nobody's paying them anymore. They've been saying, hey, nobody is willing to pay for a job posting anymore. And so they're warning on all of their earnings. It was ZipRecruiter, Indeed, all the big recruiting websites are posting lousy numbers and big warnings that says, hey, this strong jobs market, it doesn't exist, something I've been saying for months. But check out this quote from the chief economist at ZipRecruiter. The labor market overall is continuing to soar at an ideal cruising altitude, high enough to keep the unemployment rate low while creating more opportunities for workers to come in off the sidelines, but low enough so as not to cause a resurgence of inflation. And there's so much in here I take issue with. You know, first of all, ladies and gentlemen, this is your captain speaking. Just if you look out to the left side of your window, that's your hopes and dreams of retirement going up in smoke. Might experience some chop. High enough to keep the unemployment rate low. How is she saying that? Because the unemployment rate just rose by 0.3% in 1 month. That's 500,000, 1/2 of 1 million people out of work that were working a month ago. And somehow that's high enough to keep unemployment low. And she's talking about creating more opportunities for workers to come in off the sidelines, even though in the last paragraph we read, we talked about, the workers are coming in off the sidelines out of necessity, and that when they get in, there is no opportunity for them because there's no jobs for them to find. And then she's saying, but low enough so as not to cause a resurgence in inflation. That's great news, because if you are lucky enough to find a job, it doesn't pay you enough to live, and so you won't have any money to go chase goods and services. You'll get nothing for your efforts anyway. So this is the chief economist at ZipRecruiter, a company that I can't imagine why they're not doing well, when this is the kind of rhetoric we get from their chief economist. And I just can't take this wishy-washy interpretation of terrible economic data. And we're going to go over some of this terrible economic data because we got a lot of it today. And we talked a lot about the jobs report this morning, so we're not going to get too much into that. We're going to talk about these PMIs, though, because these PMIs are contrary to another one of the soft landing narratives that I've seen so much about. Mitch, I saw your hand go up there.
Yeah, real quick. So we talk a lot about, the silver and investing a lot, and I just want everybody to know I started less than 2 years ago, and my first purchase was a $2 Mercury dime, right? And that's what I just started with. You went to quarters to 50 cents. So you can start for $2.
Yep, absolutely. And a great thing is talking about that starting for $2, because my girls have their little stack going. I'm getting my girls, when they work, I make them put a little bit of their money away. But when I was a kid, my mom used to make me, when I earned money, my mom would make me put it in the bank in a savings account so I would get interest, because my mother, God bless her, love you, Mom, she's such a responsible lady. She was always the saver, always work hard and save your money. And unfortunately, our financial system is built around preying on that very responsible approach to life. The irresponsible, greedy a-holes who run the financial system have taken advantage of wonderful people like my mother their whole lives, while the savings and the hard work is inflated away, right? The inflation erodes the savings, and then the interest rate hikes destroy the economy and erode the wages so that the workers never actually get a chance to catch up. And so I've got a little bit of spin on the approach that my parents had for me, where you have to save some of the money you work. I do have my girls work and they do jobs, and I pay them for their work, but I make them put some of their money away, and I make them stack metal. I make them stack silver. And in their stack is a nice pre-64 quarter, courtesy of Mr. Mish. He added to their stack when he came out to visit last summer. So that was awesome of you, Mish. Thank you for helping to instill good economic, good financial habits in my daughters with the gift that you gave them when you were out here to visit. That was very nice of you. And I have a few more thank yous I got to say to Mr. Kevin DeBella. Thank you, Kevin, for the super chat and the support of the channel. He says, time to go long oil Question mark. That's a solid question. Oil has been hard for me this year, Kevin, but we'll look at the chart since you asked. He says, also, BRICS Plus now controls 40% of global oil production. Real risk to petrodollar coming. We'd for sure go to war over that. I agree wholeheartedly with that last part. The petrodollar, the U.S. dollar as the world reserve currency will not go quietly into the night. That will be a bloodbath. And I'm a little afraid to say I think that's inevitable. I don't think it's next Tuesday. Right? There's a lot of people. The BRICS hype, thankfully, has died down at least a little bit since the August meeting turned out to be a dud. Something I called on this channel. I caught a lot of flack when I did that video saying, like, hey, guys, this story about how the Russian government just confirmed a BRICS gold-backed currency, the whole thing traces back to one tweet from the Russian embassy in Kenya, and there's just nothing but circular reporting. One news outlet reported on the tweet, and then another news outlet reported on that news outlet, and then another news outlet reported on that news outlet. But all of the sources came right back to a single tweet from the Russian embassy. And, you know, in that article, they talked about how the Russians lie, which, by the way, hey, before you jump down my throat, all governments lie. Newsflash, governments are full of, yeah, newsflash, governments are full of it. Russians no exception, nor is the United States. But I just never bought into that hype that there was this gold-backed currency, because governments that embrace the gold standard give away their power. Going off the gold standard gave the government the ability to silently rob the masses. And the masses, thanks to our lousy education system, nobody realized it was happening to them. And to this day, most people don't realize this has happened to them. Everybody sees that inflation is a problem and they're all struggling with it. But most people buy hook, line, and sinker this garbage talking point that it's all because of greedy corporations, as if greed was invented in freaking 2020. No, greed was not invented in 2020. We printed trillions of dollars and stole wealth from existing dollars when we did that. Most people still don't understand that because we don't teach it. It's something I'm hoping to correct bit by bit with this channel. But that's where the theft comes from. And if a government goes back on the gold standard, they give away that power. And everything I've learned about powerful people in governments is that one thing they almost never do is willingly give up their power. George Washington being one of the very rare exceptions. And the only reason he did it is because he just hated politics so much he couldn't get out. He didn't like being in power. The job sucked. And that's where term limits came from. Just one guy who really hated being president. God bless him. Can you imagine if we didn't have term limits for president in this country? Oh my God. What would the world look like? By the way, Glitch McConnell. Thank you, Mish. Glitch McConnell.
I would love to take credit for that one, but I can't.
Couple of names I want to name here. Mr. Glitch McConnell, Ms. Dianne Feinstein. President doesn't know what to do with his hands. Guys, it's time to pass the torch. All right? You are not qualified to operate a motor vehicle, let alone nuclear codes or the most powerful positions in the United States Senate. Quit. Get out. And I'm not just talking to you, because in the unlikely event you see this stream, if it's not time for you to change your diaper or have a prune juice, maybe the people who are handling you, who are the real power brokers, that girl who everybody's feeling so sorry for when McConnell froze up, who was like, Senator, did you hear the question? Grandpa, your son is here. You remember your son, Grandpa. That lady, she's the most powerful person in the United States Senate because she's the one pulling the strings on Mitch McConnell. So I'm talking to her. Everyone who's like, can you imagine having her job? She loves her job. She's got power. It's time to quit. It's time to hand that job off to somebody else. I'm going to get off my political soapbox as soon as all possible. All right, Kevin, you were asking about oil. Let me do a real quick chart on oil, because oil's been tough for me this year. I'm not going to tell you yay or nay. I'm just going to look at the chart and tell you what I see it, all right? Because let's just say, all right, oil, first of all, Golden Cross. First thing that comes to mind when I look at oil. There you go. 50-day moving average breaking above the 200. Bullish indicator. We also got a breakout above this prior high from April right here. You see that high from there in April when we were rejected by the 200-day moving average, quite resoundingly rejected. Well, we made one pass at that line a few weeks ago. We failed that retest, came below it, but now we have broken out above that again. I hope I don't accidentally draw something anatomical on this chart as I do this. It's not on purpose if I do it. But I can tell you the technicals look pretty good. My one caution on the technicals is the RSI is getting a little overheated here. You see the RSI is up pushing 70. So I wouldn't be surprised to see a pullback in oil. One thing I might wait for in oil here, if I were to trade oil, which I'm not doing right now because I just can't tell which way it's going to go. There's very powerful forces of tight supplies, but also demand destruction in all corners of the economy. But I would wait for the RSI here to drag down a retest of this red line. And then if we bounce off that red line and we start moving higher, then I might think about going long oil. Or if we fail a retest, come up and hit it again and then head lower, I might even think about shorting oil. If you are going to go short oil, though, keep in mind the Saudis and the Russians have drawn a pretty significant line in the sand down here. Every time we get down around these levels in the high 60s, low 70s, there's another production cut and the price starts rising again. So if this sounds like a wishy-washy analysis of oil, it's because I don't really know which way it's going to go here. You guys let me know in the comments, where do you think oil's going to go? But that was just my hot take on the oil market. I'm not trading it right now because I'm not convinced one way or another which way it's going to move. But thank you, Kevin. I appreciate the super chat and the support of the channel, sir.
Hey, Jack, before you go on, say hi to Real Estate Mindset.
Real Estate Mindset's here. What's going on, Travis? How you doing, brother? Travis from Real Estate Mindset. One of my favorite real estate channels out there, guys. If you're not already following Travis, you should be. He's been on the channel a couple of times. He does great analysis of the housing market. Really, really good job. And Travis from Real Estate Mindset, I owe him an immense debt of gratitude because I was in a slump on this channel for about 6 months. For 6 months, this channel was not growing at all. My views were down. Things just weren't going well. I couldn't catch a break in the algorithm. I did that interview on Travis's channel. And ever since then, I have been in the good graces of the algorithm. My channel has been getting more views. I've got new subscribers coming in. Welcome to all you people who came over from Real Estate Mindset. And thank you again, Travis, so much for helping me break that slump. It was a brutal one, brother. Forever in your debt. We got to talk again. We got to set up another one, bring you on the channel and talk about what's going on in the housing market. And I got to say hi to Eric West. Thank you, Mr. West, sir, for the super chat and the support of the channel. He says, if you can get 5% a month for treasuries, why isn't everyone buying them for a 60% return a year?
We already explained that in chat.
What's that?
We've already explained that in chat.
Okay.
How
Yeah,
it's
the
an
5%
annualized
is the
number.
annual return. Yeah. It's not 5% in a month. Boy, I'll take it. I mean, if the government wants to offer that, I'll take it. No problem. But yeah, this is a monthly number. But by the way, guys, it's easy. I don't make recommendations here. I don't have the permit from the government. But let me just say, it is not very hard to set up an account with treasurydirect.com, right, where you don't even need to go to a brokerage and look for a ticker or anything. You can go right to the source, cut out the middlemen. There are no fees. The user interface sucks. It's not very good. It's a government website and all the wonderful things that comes along with that. But it's very easy to set up the account, fund it from your bank. You don't even have to transfer the funds. You just tell them what you want to buy. They reach in and they take it, and then they put it back upon maturity. It's a very easy thing to do. And your savings account right now is yielding what? If you're lucky, 1%. If your checking account is yielding what? 0.1%. You can get 5.4% almost from a 1-month treasury bill. That is virtually risk-free. If you hold it to maturity, there's no risk at all. So I don't highly recommend. Look into it. Consider it. Consult your financial professional about that if you feel so inclined. It's essentially free money. The government is going insolvent. They're bankrupting themselves with their out-of-control interest expense. You're going to pay for it eventually in the form of either taxes or inflation, so you might as well collect the interest now, because either way, you're paying for it. Thank you very much, Eric West. I do appreciate the super chat and the support of the channel, and thank you, everybody, for helping in the comments as well. Mike Bender from Robin RC BatSafe. What's going on, brother? Talk about manipulation, VIX on the daily. You know, Mike, I'm going to defer to your buddy here. What was his name? Profound. I'm going to butcher his name, but I'm going to bring him up because I've been following him on Twitter at your recommendation, and he is a great channel, and he has been talking an awful lot about the VIX trade. This guy, at Frank Oz 959-67943, expound the profound. with a whole bunch of mofo, fafo, LNL, YOLO, lamau, all that good stuff. This guy on Twitter does a very good job talking about VIX suppression. I'm going to be honest with you. This guy he's got a sharper pencil than me. He's got a better grasp of how the VIX manipulation is going. But Mike, you did turn me onto this channel, and I have learned a lot from following him. I still am having a hard time following what he's saying, but this guy is pretty sharp, and I've enjoyed his stuff. So thank you very much for the super chat, the support of the channel, and for the recommendation. But I'm going to defer to Expound the Profound's infinite wisdom on all manners of VIX manipulation, because he wrote the masterclass on that one. And I got JJ Watt. What's going on, JJ? Thank you, sir. He says, soft landing. I'm sure Powell would refer to the Titanic's maiden voyage as smooth sailing. Good news, guys. Nobody overheated on the deck of the Titanic, right? All the passengers, right? Not a single one of those passengers suffered any symptoms of heat exhaustion during that voyage. It's a very, very remarkable accomplishment. And you're right. You know, I'll call that a soft landing. I mean, sure, the hull broke in half and slammed into the ocean floor at an alarming speed as it sank to unimaginable depths. But that was a very soft landing, as evidenced by the debris strewn about the ocean floor. Yeah, thanks, JJ. I appreciate the super chat, sir, and the support of the channel. The soft landing indeed. And my buddy Jose is here, the keepers of the Buckies. Corn Nuggets, what's going on, Jose? Plug Melon Patreon. I cherish your 30-minute Zoom recordings. Thank you very much, Jose. I appreciate that. The super chat to plug the Patreon. But we have a Patreon group. There's a link down in the description below, should you feel so inclined. And our Patreon group, we get together once a week over Zoom, and we do a general Q&A on, generally I like to open it up first to everybody's questions, and then I usually have a couple of other stories that I talk about what I see in the markets. I gave a little preview of the Coreweave story on our Zoom call this week. I gave everybody a little hint at what was coming there. I really enjoy talking to the Patreon guys every week. And then, you know, I change the time. If you're in a different time zone and you can't make it, I move it around every week so everybody has a chance to get on. And then I post the recordings afterward, just in case you couldn't make it. So there you go, Jose. There's my plug for the Patreon group. Thank you, guys, should you feel so inclined. And thank you, Jose. You're a gentleman and a scholar, sir. Korov, thank you, sir, very much for your support. He says, hey, Jack, have you heard that the Philippines is imposing price controls on rice? I have, in fact. Mish sent me that link just this morning, and I bet you if I type Philippines, if I could spell Philippines, how do you spell Philippines? Is there two L's?
Phil. Phillipines.
It's not coming up, but I had it. Man, I had that one ready to go. Here, let's see. I was talking about that one this morning. Philippine rice controls. Was it price controls or export controls? Here we go. 3 days ago. No, this one was. Here we go. Twice, just this morning. Philippines caps rice prices amid hoarding and inflation risks. And guys, let me just tell you, price controls, this is a sensitive subject because sometimes this brings out the worst. Anytime food and the possibility of starvation comes out, it yanks on people's heartstrings, and it's easy to manipulate those emotional heartstrings, so keep that in mind. But the economic reality is, guys, that price controls do not work, all right? The solution to higher prices is higher prices. Now, when we're talking about food, there is an inherent brutality to the reality of that saying, right? The saying, the solution to higher prices is higher prices, means that as prices go up, demand tends to get destroyed or new supply is brought into market. Now, when we're talking about food, the prospect of demand destruction is a little scary, right? Demand destruction in food means fewer mouths to feed. That's not a good thing. But when food prices rise, farmers and agricultural producers are incentivized to produce more. And the only way those farmers are going to produce more food is if those prices are allowed to rise. If you implement price controls on food, then you're taking away the financial incentive for farmers to produce more food. And so the only thing you're doing is condemning the population to an even more severe food shortage in the future. And that's why politicians are very quick to implement price controls whenever food prices start to rise, because maybe it's politically expedient, but biologically and speaking in humanitarian terms, it makes things worse because it only means that the shortages are going to be longer and more severe. You have to let the prices rise. It's uncomfortable and it's brutal, but the alternative is even worse. And unfortunately, what the Filipinos are doing right now is they're putting limits on the price of rice, on the price of grain. They're taking away the incentive to supply more grain into that market. It's going to blow up in their face. I hate to see it. We saw a lot of that in 2022, 2021. Luckily, it didn't get too bad. It did get really bad in a lot of the countries in the global south, but it never quite made it to the Western economies. We're all struggling with inflation, but it didn't have that brutal element to it. You know, when food prices rise here in the States, it means we take a fewer vacation, or it means maybe we don't go out to eat as much. But when food prices rise in the global south, it means parents bury their kids. So, you know, it's hard to be pragmatic about this, but if you succumb to the yanking of the emotional strings, you're going to make it worse. It's kind of like the drowning victim who grabs onto the lifeguard and drags him underwater. Well, the drowning victim doesn't understand. All a drowning victim thinks is need more air, want more air, must have air. Doesn't realize if you drown the lifeguard, you're going to make things even worse. So thank you very much, Korov. Yes, I was aware of that story. We were going to talk about it this morning, but there wasn't time to get to it on the live stream. But thank you very much, sir, for the super chat and the support of the channel.
Hey,
all right.
Real quick, I think
go ahead, Mish.
People here in America don't realize, because we're more of a grain-based, wheat-based society, wheat and corn. Philippines and some of those Southeast Asian countries get as much as 60% of their calories from rice. So if 60% of your food bill jumped up 20%, you'd feel it.
Oh, yeah. You better believe that's a big deal. You know, if the price of wheat and the price of corn and soybeans were to jump 20% here in the States, you better believe bread, pasta, everything you eat would just skyrocket. Not to mention partially hydrogenated corn, soybean, whatever is in pretty much everything. But yeah, that would drive up the price of everything at the supermarket. And again, it's different for us here in the States. We're fortunate enough that we have food security here, or at least most of us have food security here in the States. In the global South, it's a totally different story. An increase like this in prices is literally life and death for a lot of people. We're very fortunate to never have to live with that here in the States. Be glad you live where you do, folks. This country ain't perfect, but you could do a heck of a lot worse. All right, let's talk about some of this economic data. This is something from the jobs data that came in today. We've got average hourly earnings in the U.S. Along with the 187,000 jobs created, we got average hourly earnings for all U.S. private non-farm payrolls increased by 4.3% from a year ago in August. So you can see here we had bigger wage gains in prior months. Now we're only growing by 4.3%. But if I may, for a moment, and before you jump down my throats, let me finish here. Back in October and back in November and December, when we were having these 5.1, 4.9% wage gains, yes, the wage gains were bigger, but back then inflation was, what was inflation? 7%, 6% back there. So even though we were getting bigger wage gains, the rate of inflation was higher than the wage gains. So your real earnings, the amount of stuff you can buy for your average hourly earnings, was going down. Now the rate of inflation is down to 3.3%, but our wages are now 4.4, 4.3% rising. So for the last 2 months only, I want to draw that distinction. Only for the last 2 months, you haven't felt it, but it has been true. The average hourly wage gains in the U.S. have exceeded the rate of inflation for just the last 2 months. Now, it's little comfort after years and years of higher inflation than wage gains, so you're not going to notice that fraction of a percent of gain in real wages, especially not in the context of the brutal beating that you've taken in the last few years when we've had inflation that, if you go by the government statistics, you still had negative wage gains, but the reality on the ground, inflation was closer to 15, 17% last year. So everybody took a hit to their standard of living. That trend has just now started to reverse. And we're starting to see this with the UAW, the unions demanding 40% wages increases, right? The airline pilots getting big wage increases. The UPS drivers getting big wage increases. We're seeing all these labor disputes all over the country. There are workers are demanding a higher wage, and they're finally starting to get it. And that's another reason why the Fed is not done hurting us, because the Fed does not want those wages to rise. The Fed wants the inflation to lower our standard of living and increase their wealth, but they don't want our wages to rise. And this is a predictable, repeatable pattern that the Fed has done to us since 1971. I love this website. WTF happened in 1971. And guys, there's chart after chart about all the different ways inflation has hurt you since we went off the gold standard. But you don't even need to go to all those other ones. The first chart that greets you says it all. When they first give you average productivity of the American worker, shown here in yellow or green. Apparently, I'm colorblind. Some people say yellow, some people say green. And then the red line is your average hourly compensation. Now, since 1948, from 1948 all the way up until 1972 or 1971, as your productivity increased, you being the average American worker, your wage increased at the same rate. So what we had here was literally shared prosperity. That's not a communist talking point. That was actually a capitalist reality in the United States for most of our history. As our productivity increased, we demanded higher wages, and the employers could afford to give them to us, and so we got them. The employer got wealthier, we got wealthier. Life got better for everyone, and there was no commissar, whatever, comrade in some palace somewhere making that decision for everybody. The free market arrived at that on its own without government intervention. Then in 1971, we went off the gold standard, and monetary debasement became the policy of our central bank. And ever since then, this cycle of money printing leading to inflation and then fighting the inflation with rate hikes that cause unemployment, depressing wages, rinse, repeat. Ever since 1971, this gap has grown. The productivity has continued to go up. The average American worker is still on the same trend of productivity. It's slowed a little bit in the last year or so, but this trend line is intact of our productivity increasing. We are generating more and more economic activity for every hour of work than ever before. And yet in 1971, our wages stopped going up. We generated more economic activity for our labor, but we got none of the extra money back. And that all started, look at it, clear as day here. WTF happened in 1971. This is what doesn't get taught in schools. This is what I'm trying to fix with this channel. This is one of the things I'm hoping to teach people, is that it's what they do to the money. All these political arguments that we have, and it's why I try to avoid politics on this channel. Sometimes I can't help it. But all the things that they use to make us hate each other, to make us fight each other, they would go away, or at least they would be significantly lessened if they would fix the money and stop making us poorer. Because they make us poorer, and then they convince us that the problem is people who don't look like you doing it to you, or the problem is people who don't think like you are doing it to you, or people who pray differently or pray at all or don't pray. They're the ones that are doing it to you. Or whatever people do in their bedroom, that's why it's happening to you. No, it's because of what they do to the money when they steal the wealth from the money and give it to themselves. That's what the Fed did with the money printing in 2020. And everybody, because of the economic illiteracy in this country, we were just so happy to get our $600 stimmy check. Oh boy, economic illiteracy for $600, Alex. Not realizing they're taking $3,000 out of our savings, they're giving us $600 in the mailbox, and they're telling us you're welcome. That's what stimulus is. It's theft. And that's why governments will never willingly go back on the gold standard. Powerful men will never give up their ability to do that to you, not without a fight. So that was the average hourly earnings. We also got PMIs. Let me go through these real fast, guys, because I rambled today and I don't want to run too long. The S&P Global US Manufacturing PI was revised higher to 47.9 in August. 47.9, still below 50, so it is still in contraction. Manufacturing in the United States continues to slow. A sharper fall in new orders led to renewed contraction in output. We've been hearing for months about how retailers are going to start restocking. They're going to start reordering things to rebuild their inventory. We've been hearing about it all year. It's still not happening. New orders continue to fall. While firms continue to deplete their backlogged orders and stock finished goods, nevertheless, manufacturers continue to raise employment to support expected growth of workloads. That's a big one. Manufacturers raising employment to support expected growth of workloads. What happens if that growth doesn't show up? Uh-oh. On the price front, average input prices rose for the second month running and at a slightly faster rate. Higher costs continued to be passed on to customers. Oh, that sounds inflationary, as output prices rose at the fastest pace in 4 months. So look at this. Here's the 50% line, guys, right here where my mouse is. We have been below 50, which means manufacturing contracting every single month with the exception of April, just after the Fed pumped liquidity to save the banks. Other than that, every month going back to last fall, manufacturing has been in decline in the U.S. We get the same thing in the ISM Purchasing Managers Index. This is another private sector data point, just like S&P Global's. The ISM manufacturing climbed to 47.6, still in contraction territory below 50. That's versus the previous month's 46.4. While production levels stabilized, the inflow of new orders experienced a more rapid decline. So the new orders aren't picking up. Guys, they're declining faster in the ISM numbers. Where is that inventory growth? Where's that restocking? It's nowhere to be found. The pace of job shedding showed signs of easing. Now, this is a little bit of a differentiation here. The ISM number shows jobs shedding. The S&P Global shows jobs being added. So a little bit of a change there between the two. On the cost front, factory input prices remained subdued, but showed signs of reversing as the survey's measures of prices paid by manufacturers rose to 48.4 last month from 42.6. So that shows prices falling, but falling slower. Again, a trend in the inflationary direction, but not very convincing either way. The PMI has consistently remained below 50 threshold since last November, signifying a prolonged period of contraction in the manufacturing sector, which is the most extended stretch of its kind since the Great Recession of 2007 to 2009. Where is your soft landing, J-Pow? Listen to that language here, guys. The PMI has consistently remained below 50 threshold since last November, signifying a prolonged period of contraction in the manufacturing sector, which is the most extended stretch of its kind since the Great Recession. If that is a soft landing, I would hate to see what a crash looks like. And here you go. Here's your 50 line right up here, guys. Every month since October, we have been in contraction in manufacturing. Even when you see this trending up a little bit here, it's trending up, but it's still below 50. So that means it's falling, but it's falling slower. We're still in contraction. It's still going down. All right, guys, the markets are closed. Let's see what we got to close out the day. It's 4:03. The S&P eked out a positive day, up 6.5 points to close at 4,514, up 0.15%. S&P had a fantastic week. So did the Dow, closed at 34,838, up 116 points or a third of 1% on the day. Great week for the Dow. NASDAQ did have a good week, over 14,000, closed at 14,031, but down 3 points on the day. We're going to call that a push. That's a pretty even close. So the NASDAQ underperformed the other indexes today, but still things not going pretty well. Things going pretty well, I should say, for stocks. Again, stocks and the economy, though, two totally different animals, guys. All right, I got a couple other things I want to talk about. First of all, I have to bring this one up, guys, because I mentioned it this morning, and it's so important. This video I did about Coreweave, let me flash the thumbnail here. Here it is, all right? I posted this one late last night at 11 p.m. You must see this video, guys. This is probably the single most important video I've ever done. If you own any asset at all right now, anything that has done well for the last few months, you better watch this video and you better understand what it means for those assets that you own. Because from my vantage point, it looks like there is some very shady dealings going on and money being funneled through conduit companies into Nvidia by a hedge fund that has some of the sleaziest history of any hedge fund on Wall Street. And I do not toss that term around lightly, guys. It is really gross. The same people who pushed, first of all, they created garbage CDOs on purpose and then had them sold to unsuspecting retail investors while betting against them. So one of the sleaziest trades in the history of Wall Street. And these are the people who are funneling money through Coreweave and into Nvidia. The same people who made money unloading all that toxic mortgage debt from banks' balance sheets onto unsuspecting investors. They're the same people that are pumping Nvidia stock right now. You better check out that video, guys. It's arguably the most important video I've ever done on this channel, and it is just part 2 of 3. There is more to come on that subject. It's going around on Twitter. It's not doing so well on the YouTubes. That's interesting. It's doing really well on Twitter, but for whatever reason, YouTube isn't showing it to that many people. But if you do see that video, please like it, thumb it up, but also share it. Send it to other people. Post it to your Facebook, post it to your Twitter, your X, whatever social media you use. Get the word out there. People need to know what's happening. The people that are doing this have done this before. They got away with it. They got rich off of it, which means they are emboldened and there's nothing stopping them from doing it again. And the only way to prevent it, or it's probably too late to prevent it, but lessen the impact of it, is to shine a great big giant light on it. And that's what I'm trying to do with that video. So please, guys, like that video, share it. And if you haven't seen it already, go check that out. There is a link down in the description below to that one. And Mish, you got anything you want to talk about, brother, before we get going today?
Sorry, I had the mute on. I was like, oh my God, give me a second. No, man, I think we hit everything.
All right. Guys, we're going to cut it short. We've been running like longer than an hour on Friday the last few weeks, and I try not to do that, but some days I just can't shut my big yapper, and I just run long. The next thing I know, it's been an hour and a half. So we're going to cut this one a little bit short. I want to say thank you to Mish. Thank you to all my mods and my blue wrenches for keeping things neat and tidy in the chat. Thank you to everybody for the super chats. I hope I didn't miss anybody. I did not miss anybody. Thank you to my Patreon supporters for everything you guys do for the channel. You are awesome. Links down below. Right below that link. Go ahead. Oh.
Did you get the Jose Orozco shout out to the Oliver?
Oh, wait. Hold on. Stop the music. Stop the music. I didn't. Oh, my God. I missed. Shout out to Oliver Anthony. Rich men north of Richmond. Dollar ain't stuff. I don't want to get myself censored. I really like that song. And listen, Jose, I don't really do country. Don't take this the wrong way. I know you country guys, you like music. Country's never really been my thing. I loved that song. I love the story behind this guy. Oliver, if you're out there, if you're listening, keep going, brother. I know you didn't ask for the mic, but you have the mic and people are listening. People want to hear what you have to say, and what you have to say is important. And to be honest with you, I don't have anything resembling a talent or a voice or a decent guitar. I own a guitar. I make noise with it, but not like you can. Make the most of that message, because I think you're saying the same thing I'm saying here. Maybe, maybe not, but the world needs to hear it. So make the most of it, brother. We're all pulling for you. Thank you, Jose, for the super chat, the support of the channel. Here comes the music again. All right, guys, thank you so much. Have an awesome weekend. Hard times are coming, but they're not here yet. So give your loved ones a hug and a kiss. Call your mom. Tell her you love her. Hi, Mom. Hi, Dad. I love you guys. Till next time, live small and dream big.